Next, take a look at Amazon. This is a weekly chart. So we had a breakout there a few weeks ago. We did look at this in last month's newsletter. It broke out, and that's not a bad breakout bar, quite a nice one. But then it immediately reversed down the next week, giving a classic bearish weekly candle, dark cloud cover as it's called, and after minor bounce, it then had a very sharp sell-off last week on its results. It is holding on to support at line 2, and I think this is its 50-week moving average. So this is a very important support level here at 3305. It's crucial to see what happens here. It needs to hold this level, and I've stated that the stop loss is a weekly close below this line. I've given you the levels of the line is rising by $15 per week, meaning from next week it'll be up by $15 as line 4 per week. That's the stop level right now. I don't like the look of this. In fact, if it bounces a bit, I would just get out. Assuming you didn't get out before, I would be looking to get out of it. This kind of failed breakout is not a good sign, especially from a major stock like Amazon. This is a bit of a warning sign for the Nasdaq. You'll note that there was a negative divergence there. I thought on the breakout of the price that it would take away the divergence, but clearly it didn't. And that bearish candle there was a big initial warning sign. But holding above support, I would continue to hold it, but with great caution, as I've mentioned there. If it does break down, it could drop all the way back to line 2 here, which would be a big drop. But I'd expect it first to find support at these levels here, which I have given in the notes. So this is a concern, and the interesting thing about this sell-off that it had last week is that Amazon actually came out with very good results. The earnings beat expectations. However, it probably didn't beat expectations by as much as the street, as they call it, was hoping for. So this is very interesting because the bar has now been set very high on these tech stocks, and if they are not significantly beating earnings, you see here Amazon is the first one that's got absolutely hammered. It's not like Amazon missed earnings and missed it badly. Amazon actually beat earnings, but it still sold off heavily. That's a warning sign for the US market in general. So just keep note of that. Not a good sign. And monitor your stop here closely if you are in it.